money is going to flow into gold very, very quickly. And I do think you head up towards, by year end, potentially 2,500. Gold is down fractionally and silver's taking a much bigger hit. I also worry about the industrial side of things. So I am net, if you ask me in the next 5 years, I love silver. I think it's well above 30, maybe even retesting, $50. But in the shorter term here, with potential for, the economy still slowing down, you just want to be a little bit more cautious on silver versus gold is the pure play. That's the place to be when you're fearful, when things are not going well for the economy, all of those scenarios.
In investments, seasoned analyst Gareth Solway, the master trader and chief market strategist at Verified Investing, has set bold predictions for the precious metals market in 2024. According to Solway, gold is anticipated to soar to $2,500, while silver is expected to reach $30 to $50 within 5 years. Solway's insights into silver's potential breakout come amidst recent market activity. Although silver saw a brief spike, reaching a 2-day high of $23.51, it retreated after the release of mixed U.S. economic data. The silver daily chart reflects a neutral bias for the gray metal. Notably, the 50, 100, and 200-day moving averages remain flat, indicating indecision among traders. Employing trend lines to analyze price movements, Solway suggests a bullish bias in the short term. However, he cautions that this anticipated rise is likely temporary. He points to a previously completed head and shoulders pattern, emphasizing that breaking the $23 mark would halt the upward momentum, potentially triggering a decline. In his analysis, Solway distinguishes gold and silver. Gold is often viewed as a pure play for protecting investments during uncertain times, while silver assumes a dual role, influenced by economic factors and industrial applications. Looking into the industrial side of silver, Solway's predictions align with expectations of an 8% growth in industrial demand. Projections indicate a record high of 632 million ounces in 2023, fueled by investments in photovoltaics, power grids, 5G networks, the surge in consumer electronics, and increased vehicle production. These insights were shared during a presentation at the Silver Institute's annual Silver Industry Dinner in New York City in November. Before you watch Gareth Solway's interview, subscribe to our channel and give this video a big thumbs up.
Silver is stuck in this little bit of a wedge pattern here, and it keeps on hitting on resistance just like gold. The difference with gold is it's a flat top, right? So the gold one is generally, it's showing more relative strength with gold because it's a flat top versus these are all lower highs. And so in general, you still have the potential for a breakout on silver, but again, it's just a little bit weaker than gold, as again, it is making lower highs as it's consolidating in this pattern. Again, you can connect these lows, you connect the highs. As a technician, you basically are watching which line does it break above. Does it break above this one? Or does it break below this one? And that would be your next major move in the commodity. I favor the upside, but again, I'm not loving the price action today that we've seen. It is dropping quite a bit compared to gold. Gold is down fractionally and silver's taking a much bigger hit. I also worry about the industrial side of things. So I am net, if you ask me in the next 5 years, I love silver. I think it's well above 30, maybe even retesting, $50. But in the shorter term here, with potential for, the economy still slowing down, you just want to be a little bit more cautious on silver versus gold is the pure play. That's the place to be when you're fearful, when things are not going well for the economy, all of those scenarios. I think to some extent it is still a precious metal, so it's still something. It's kind of like they call it the poor man's gold, right? It's the cheaper version of a precious metal. But there is more and more use cases as we get these electric batteries and so on and so forth that kind of brings that industrial side to it. And so you have to, as an investor, you wouldn't be an investor that would say, hey, I want to protect myself with just buying silver. You have to kind of spread that money around the other precious metals because, again, it's not a pure play for protection. We have this major level, which goes back to 2020. And this is a hard breakout because it's such a long-term move, or goes back essentially now, we're approaching 4 years of price action where it's been held in check just around this 2075 level. Now, we did get that one pop above, but I think going back to when this actually happened, it was a Sunday night. The S&P futures and the gold futures opened at 6 p.m. Eastern time. And it was like a 20-minute period where you just saw basically the stops run to the upside before kind of the the powers that be drove it back down below. So it was a really quick little pop. I think people got very excited about it, but in reality, it was not a lot of action in that period. Since then, we've reattacked this level. To me, this level gets broken. There's no doubt in my mind it gets broken to the upside. I think you're just seeing, again, as the dollar gains, it's putting a little pressure on gold. But for the most part, when you hit a trend line like this and you have this pattern formation, 8 out of every 10 times, 80 out of 100 times, this thing breaks out, and you should see a significant move up. Once it really establishes itself above this level, money is going to flow into gold very, very quickly. And I do think you head up towards, by year end, potentially 2,500.
Gareth Solway's projections for the gold market take center stage. Solway, a respected figure in the investment realm, foresees completion of the gold price move around $25.50 to $25.25 in 2024. Signaling a potentially bullish journey for the precious metal. However, the current landscape paints a different picture. Despite a swift recovery in gold prices, the labor demand remains unexpectedly robust in December. Gold hovers around the $20.46.05 level, settling just below it. The EMA 50 exerts continuous negative pressure on the price, indicating a potential resumption of the expected bearish trend on an intraday basis. Shifting our focus to the broader economic scenario, Solway's insights intertwine with the Federal Reserve's Fed intricate dance with interest rates. According to Solway, the markets are anticipating the possibility of a substantial 6 or 7 interest rate cut in 2024, contingent on the Fed's decision to implement such measures. Contrastingly, the Fed's latest summary of economic projections, released in December, indicates a more conservative outlook. The central bank hints at 3 potential rate cuts in the coming year, each constituting a 0.25 percentage point decrease. This divergence in expectations underscores a nuanced challenge for the Fed. Let's get back to the interview.
Let's take a look. And one of the things that I've seen here is that there's basically what we would call an inverse head and shoulders, right? So an inverse head and shoulders, here's your left shoulder up. Here's your head right up there. And then here's your right shoulder here. Okay. And the idea is that when you have an inverse head and shoulders, it's a bullish breakout scenario. When it gets above this yellow line, that's the breakout. It has to be on a daily closing basis. And what you do is you basically can measure your move to decipher where the target will be when this pattern completes. And to do that, essentially what we do here is we take the lowest point of the head and draw straight up to that neckline. It's about $460. And then we extrapolate that same move out to the upside. We do $460 to the upside here. And that will give us a completion of that move. And so there you have it right there. So you're basically talking about if this pattern completes in 2024, we would go up to about this 2,550, 25 and a quarter level on the charts. And again, that's standard technical analysis. I'll show you guys something really cool here. If we go to the chart on oil, this actually just played out and I had alerted people to it. Let me just refresh my chart there. So we had this head and shoulder pattern. Let me just go into it right over here. And so I'm going to draw it up again so you guys can see it in action. So you had a shoulder, head, shoulder here. And then right there, this is where it broke down, right? And so what we do is we do that same sort of thing where we take a price range. We take the highest point of the head down to the neckline, straight vertical drop, about $13.90. And from the point it breaks, we drop $13.90 here. And what we could see is look at where we bottomed out on oil, right into that target. So this is kind of this is what we would call a head and shoulders, which is bearish. The one we were looking at on gold is an inverse, which is bullish, obviously. So again, just really, I always like to show people how it works out and plays out. And that example on oil is just absolutely perfect. The markets took this all clear. Investors took that all clear from Jerome Powell's comments, not thinking through the process, right? So if the Fed is really going to cut what the markets are pricing in, 6 or 7 rate cuts this year in 2024, think about where the economy is at that point. Like what has to happen to the economy for the Fed to take that action? And it's not good. So again, into year end, the market kind of said, you know what, we're going to ignore this. We're just going to float up. We don't want to sell because, again, tax penalties were a big factor in my opinion. But now it's reality. Reality sets back in, and we're going to get the Fed minutes out here shortly. We'll get the Fed at the end of the month, and we get the jobs data on Friday as well, which we're going to see as well. So,
given the contrasting views on the number of anticipated interest rate cuts in 2024, how do investors plan to navigate this uncertainty in the coming months? Considering the dual role of silver in both economic and industrial contexts, how do Solway's predictions align with broader market sentiments, And what potential impact could industrial demand have on silver prices? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Surprisingly, around 19.8% of our viewers have subscribed. We aim to reach 5,000 subscribers as soon as possible, and your support could make a big difference. Thank you for being a part of our community.